And today I am joined by Jennifer Howard. Jennifer is the Technical Assistant Specialist with Rural Coalition, and as a part of her job, she supports people or farmers with understanding and acquiring, if I'm not mistaken, right, crop insurance. And so the reason we're doing this webinar is just to educate people, not unlike myself, about crop insurance. My family and I, we own 41 acres out in Nicodemus, and when we did our first season of planting, I did not have any idea that crop insurance both has a timeline that you have to receive or get it by, all the different benefits of crop insurance. I wouldn't even know where to start. And I thought that this webinar would be very useful for others as well, just to kind of educate us on crop insurance. So what we'd like to get from this is just why get crop insurance? What are the benefits? What are the costs? How is that even calculated? Timelines and deadlines, as well as how does it compare to other insurances? What's the difference? So I'm going to turn it over to you, Jennifer. But yes, thank you again for joining us.
Yeah, thanks for having me. I'm excited to be here and share this information with you all. To start off with, I have our presentation here that we'll go through, and hopefully it'll answer some of the questions that you all have, and we'll just go from there. So crop insurance 101, because Mother Nature has a mood swing. That's what we're going to focus for today.
I like that. Actually, she did have a mood swing. My first year, we got no rain. What we did get was some very unhealthy wheat. Enough to harvest, but not anything like what we're getting this year. So I love that title.
Yeah, thank you. Well, first let's start off with why get crop insurance. Crop insurance can help you recover some of your losses in the event of natural disasters like the drought. Also, it's required for many farm loans with banks or for programs for the USDA. And it can also help you have a better understanding of the overall health of your farm business operation due to keeping records of crops, grown, yields, and losses.
So it's required for farm loans?
Yes.
So I mean, I got a loan, but it was through First State. They never said that to me. So it just depends on if you based it on your production, or how does that work?
It's going to depend on the type of loan it is as well, where you get it from, that sort of thing. So having proper records for your farm is something that we'll talk about too. That's really important as well. So
thank you.
Yeah, you're welcome. So first I'd like to discuss, there's a difference between private crop insurance as well as publicly subsidized, which is through programs like the USDA, RMA, which is the Risk Management Agency. Basically, publicly subsidized means it's federally subsidized, and it's going to be a multiple peril crop insurance, also known as MPCI. In addition, with that, it must be purchased before. And on the other half, we have private crop insurance, which is going to be state regulated private crop insurance, and that may be purchased at any time during the growing season. So there's going to be a difference if you're working with RMA or FSA. There's going to be a certain purchase date that you have to plan, and we'll speak more on the dates later in the presentation.
So then I was misinformed. I thought that once I missed some deadline that I wasn't even sure when it was, I could no longer get it. So you can get crop insurance all the way up until harvest?
Not necessarily. What the difference is going to be, it's going to be if you're going to go through the subsidized crop insurance versus like a private insurance company that's selling their own policy.
Okay.
Yeah. So I just wanted to make sure everyone was kind of aware of the flow of how things work. We start off with the USDA, which is the United States Department of Agriculture, and they manage the country's food, agriculture, and natural resources. Then within them, they have the Risk Management Agency, which is what you'll work with when dealing with crop insurance, a lot with them. And they are the ones who help farmers and ranchers manage their risks The RMA manages the FCIC and provides management tools. The FCIC is known as the Federal Crop Insurance Corporation, so it's our next one over. And they manage the federal crop insurance program. The FCIC works with private insurers to run the program. They also work with a term you'll hear a lot in crop insurance is an AIP, which is known as an approved insurance provider. And what they are they're private insurance companies that sell and service crop insurance for farmers.
Like a broker?
Yes, like a broker.
Okay.
Well, your agent is more like your broker, so the next one down would be.
Okay.
But the AIPs work with the agents to sell the crop insurance. And then we go down to the insurance agencies and agents and adjusters, and then to the ranchers and the farmers. For this particular side, we're going to be discussing the risk management agency and the farm service agency. So there is both of those two agencies work with crop insurance just in different manners. The risk management agency mainly manages publicly subsidized crop insurance programs for widely grown, commercially available crops through a reinsurance agreement with authorized crop insurance providers, or as we had previously mentioned, the AIPs. Mm-hmm. Then you have the Farm Service Agency, and what they do is they administer the FSA non-insured crop disaster assistance program. And what that is, it provides insurance for crops that are not commonly or easily insured, such as specialty crops, which fall outside the scope of RMA standard crop insurance. So that is where those two programs differ. One is more specific to crops that are not insured, where one is going to be crops that are insured through the risk management agency. One of the things I thought that was important is to understand the crop insurance process or cycle. So here on this particular slide, I have the crop insurance or the insurance cycle. Basically, it kind of has 4 parts to it. A farmer will go through the application process, and then you work with your coverages and your billings, and then you would go into, if you have a claim, the claims process, and then towards the end of the season it will go through program changes or changes that may need to be for your next year once you have insurance for the following year. Crop insurance typically covers things such as drought, excessive moisture, hail, wind, frost, tornado, lightning, flood, insect infestation, plant disease, wildlife damage, fire, or earthquake. Each policy that you get, you want to make sure that you read what the coverage is for your policy to make sure it's actually something that's going to help your farm. You don't want things that are not going to be necessary for your farm. And a part of that is working with your agent who's going to assist you. And we'll speak about your agent further in the presentation because that's going to be a big important role as well. So, one of the things I wanted to make sure there is an understanding of policies, plans, and provisions. In crop insurance, a policy is the contract between the farmer and the insurer, covering the premiums, the terms, and covered losses. Covered losses are also, there's a word called perils, which would be different causes of a loss or what causes the damage for a farmer. Provisions of a policy are the detailed rules governing coverage, claims, and eligibility, outlining valid claims, reporting requirements, and coverage limits. So I have some examples kind of to explain that further. For instance, a policy. A farmer buys a crop insurance policy from a company that covers corn against weather-related losses. Then when you look into the plan, within that policy, the farmer chooses a revenue protection plan, which means their payout will be based on both yield and market price. And then when you look at the provisions of that, the policy might include provisions stating that the farmer must report any potential damage within a certain time frame, or that certain types of insect damages are not covered. So that just kind of breaks it down a little bit further. RMA provides policies for over 100 crops. Policies typically consist of general crop insurance provisions, specific crop provisions, and policy endorsements, which are changes to a policy's terms, conditions, or coverage, and special provisions. In addition, RMA has crop policies available in specific counties and states. Insurance policies are available for a wide range of commodities, but some are still in the pilot phase or have limited availability due to not yet being rolled out nationwide. As a result, certain policies may not be accessible in the area you live, and so you want to really work with your agent to see what coverages are available. RMA insurance plans, there are three main types of policies out there. You have yield-based insurance, you also have revenue-based insurance, and then there's a combination of the two, seen in like the whole farm revenue protection and micro farm insurance. And we're going to go into more details about those policies a little bit later in this presentation. And then on the flip side, you have private insurance policies, or policies that are not federally subsidized like in RMA, which offer crop hail insurance, which covers perils such as hail, vandalism, malicious mischief, transit coverage. They may also offer named peril insurance, which covers a specific peril. It may also work in conjunction with RMA policy plans. I wanted to go into a little bit more detail regarding the NAP program. So now we're going to talk about FSA policies, such as the Non-Insured Crop Disaster Assistance, or NAP program. It's administered by the USDA's Farm Service Agency Office, and it receives funding from government budgets. It may also involve premiums paid by farmers. The coverage itself, NAP is designed to provide insurance for crops ineligible for RMA insurance. It covers crop loss due to natural disasters such as drought, hail, excessive moisture, freeze, tornado, wind, those sorts of things. And then coverage options are available at set levels of expected production and market, and you can buy higher coverage levels of coverage if you wish to. So how do you get NAP coverage? Firstly, what you can do is farmers can apply for NAP through your local service center or farm service. So steps for applying for NAP, like I mentioned, you're going to find your local FSA office. You're going to make sure you need to make sure when you're getting or obtaining crop insurance that your farm has a farm number with the FSA office, and they can also help you apply for one, and it's free to apply. You're also going to complete an application, the CCC 471, and this is the application for NAP insurance. And you'll list what crops you wish to have covered and the coverage levels that you desire. And then you're going to pay your premiums for that. Pay the portion of the premium and service fees required based on your coverage level. And if filing a form CCC 860, which is the Socially Disadvantaged Low Income Beginning and Veteran Farmers and Ranchers form for free basic coverage or a 50% discount on increased coverage, but make sure that that's on file for your farm. If you were wanting to obtain crop insurance outside of FSA and through the risk management agency, you would still kind of follow the same steps. You're going to find an agent, and you're going to assess your needs, discuss your farming operation with your farming agent. or your crop insurance agent to determine the suitable coverage level and policy type. And you will also choose your policy that aligns with your needs and preferences for your farm. You're going to complete the application, and most of the time your agent will help you complete that application and fill it out, and you will pay your premium, and then you will have an annual review, and you'll review your coverage annually with your agent to ensure that it's still adequate. And then if you have any claims, you'll file your claims for your farm. One of the things that's important that I want to mention is why should I look for, or what should I look for in a crop insurance agent? Basically, an identical crop insurance policy will cost the same no matter what agent you use because the prices are set by the USDA Risk Management Agency. Oh. So therefore, your relationship with the agent and their understanding of crop insurance is what's going to matter most when looking for an agent. Now, this is for if you're trying to attain subsidized crop insurance as opposed to
through the USDA.
Yeah. So you're going to want to, yes.
I'm learning.
Yeah. You're going to want to make sure that when you look for an agent, it's someone you can work with, basically. Someone who's going to be knowledgeable. Do they understand insurance products to be able to let you know like what new things are out? Do they have the ability to get the answers to your questions if they don't know that? You want to make sure your agent values your relationship with them. Do they have an understanding of your operation and your needs, or are they just kind of blowing you off for a bigger farmer kind of that they're more worried about? Make sure your agent has availability. Some types of claims need an immediate response. So when a loss event happens, will you be able to reach your agent or someone in their office who can assist you, or is it just going to keep ringing and ringing and ringing? Make sure your agent is aligned with the AIP that will serve your needs. And again, AIP is the approved insurance providers, and they pay crop insurance agents. AIPs are private companies that partner with the federal government to offer crop insurance, and AIPs use independent licensed agents to market their crop insurance. AIPs pay agents commissions, which are usually a percentage of the premium. So sometimes you'll have an agent, if they're not a good agent, they'll be trying to sell you a specific policy just because of who they're working with. So you want to make sure that your agent is going to be the one working for you and not the other way around.
So the coverage is going to be the same no matter where you go?
Not the
or
coverage.
Premium?
The premium.
The premium.
And that's only for subsidized
ones. Okay.
Yeah. Mm-hmm. So that's why I'm wanting to stress that you want to make sure you can find an agent that will work for you and help you, because the premium's going to be, the price is going to be the same.
Yeah. It's just making sure you have the right kind of coverage, and that's where their expertise comes in.
Yes.
Understood. Mm-hmm.
Yeah. So what documents do you need to obtain crop insurance? You're going to complete an application, and you'll do the provisions of the policy. You're going to need a production report, an acreage report, and then you will also get a schedule of insurance. So we're going to break this down in the next few slides here quickly for you all. First, the crop insurance application may look like this.
How many pages is that?
So this one is 9, but the actual application is just this first page.
Oh, that's awesome.
So what I've done is it actually kind of tells you how to fill it out kind of on the following pages.
Okay. So you mentioned the broker, not the broker, but the agent. The agent's going to help you navigate what's going to be best for you. So does that mean that they're the continuity of this education, that once we find an agent, we get to ask those questions? What is crop insurance? Why am I getting this?
Yes, of course. I would definitely grill them, because that's what they're there for, is to help you understand, one, what you're getting into, because one, you're paying your money for something, for a product that's supposed to help you. So if they're selling you something that's not going to be helpful to you, why are they doing that? What's the thinking behind that? A lot of times they're getting paid from an AIP to sell this product that you might not even need.
Yeah.
And so I think it's really
You
important.
could be overinsured.
Right.
But that's normal. That's like with your home or your dwelling or a business. I've actually run into that where as a home, when we are really ready to try to make sense of the cost that we're spending on homeowners insurance, which is extremely high now, we go in there and we realize we're overinsured. Like your dwelling is worth $800,000. To redo it is probably like $1 million, but they'll make you do coverage for 1.4 or 1.2, and there's no real reason why. Or they'll do other structures, and you have nothing on your property. So why would you have other structure coverage? You know, so it's just as you run into it, or you always kind of happenstance across something and learn a little bit more because of it. So there is such thing as being overcovered or having too much coverage in crop insurance.
Well, and one of the things you want to look at for your farm or what you're doing is how much risk are you wanting to take on? Because that's where your premiums come to play. If you're a person who doesn't mind taking the risk, then a lower policy may help you. But if you're someone who doesn't like taking risks, you might want to pay a little bit more for a premium for a policy for that. So it's going to kind of depend on what you can afford, how much risk averse you are, those sorts of things. And that's why it's important to develop a relationship with your agent, because you need to be able to come back to them year after year to talk about what's going on with your farm and how they can find the right products to help you out with that.
Okay.
Yeah. So this next slide, as we continue, is talking about the provisions of a policy, which basically crop insurance provisions are the terms and conditions of a crop insurance policy, and they're normally sent to you after your policy is issued. Provisions include basic provisions, crop provisions, and special provisions, and more. So as you read down the slide, you can find more about that. And then we get to something that's really important. It's your production report, your actual production report. It tells the yield history of your farm and serves as a basis for most coverages when you're trying to obtain a crop insurance plan. This is where you account for all your growing history, and producers must be able to prove the land upon which an insured crop will be grown is productive and establishes the productivity of the land, so insurance premiums can be established.
And if you never produce on that property, what will they want then?
Okay, so further in this slide, what you'll want is what's considered that transitional yield or the T yield. And so basically that's going to be a yield for your area where you're located, and they will work off of that amount. To prove your history, you're going to use things like elevator receipts, feeding records of your livestock, those sorts of things for measurements.
Yeah, I almost had a question, but I was thinking it was elevator receipts of the grain elevator, right?
Yes.
Okay.
Yeah. Yep. Sorry. Then the next important thing is an acreage report. You're going to hear a lot about your production history and your acreage reports. An acreage report is a document filed by farmers with the USDA that details the type of crops grown on your land, the intended use for those crops, and the total acres dedicated to each crop. Okay. So it's essentially providing a record of what crops are where on your farm and how much land is used for them. What I have here is kind of what it looks like, just to show those who have questions about kind of what it's going to look like.